One day your money is there. The next day it isn't. No call, no warning, no explanation. Just a declined card at checkout and a customer service line that tells you absolutely nothing. Here's the part that should actually bother you. Your bank might legally be required to keep you in the dark, even if they know exactly why they froze you. This isn't some rogue employee overstepping. It's not a glitch. It's federal law. And the system was built so deliberately around secrecy that the law literally has the word secrecy in its name. Let's get into how this actually works. The law with secrecy built into the title. The Bank Secrecy Act requires banks to report suspicious activity that might signal criminal activity, things like money laundering or tax evasion. It's been amended over the decades, most notably to fold in provisions from the Patriot Act after 9/11, which now requires every single bank to adopt a customer identification program as part of its compliance. Here's the mechanism in plain terms. Banks aren't just allowed to monitor your transactions. They're legally required to maintain a written compliance program specifically designed to detect transactions that might involve money laundering or financial crimes. And that program runs on automated systems, comparing every transaction you make against your normal account history. The moment your spending pattern looks different enough from your usual baseline, a bigger transfer than normal, an unfamiliar country, a sudden change in behavior, the system can flag it automatically. No human even has to be watching in real time. A freeze blocks your withdrawals, transfers, and purchases, while deposits keep flowing in. Money goes in, nothing comes out. Why the bank won't just tell you. This is the part that feels genuinely unfair, and it kind of is by design. Once a freeze is triggered, the bank's compliance department opens an internal review, examining the flagged transactions and your broader account history, where the money came from, where it went, whether there's a reasonable explanation. The bank isn't trying to prove you did something wrong. It's deciding whether the activity needs to be reported to the government. And if it does, the bank must file a suspicious activity report with FinCEN, the Treasury's Financial Crimes Unit, within 30 calendar days of first detecting the suspicious activity, with a possible 30-day extension if they need more time to identify a suspect. Here's the detail that explains the silence. A suspicious activity report is, by design, supposed to be filed without you knowing about it. The entire point of the report is to flag potential criminal activity to investigators before the person involved has a chance to react. Telling you outright, "We filed a SAR on you," would defeat the purpose of the report in the first place, so banks tend to stay vague. Your account is under review, rather than confirm or deny that a report has even been filed. This isn't a customer service failure. It's banks following the law as written. The innocent get caught in the net too. Here's where the system gets genuinely messy, because the triggers for a freeze aren't always tied to anything actually illegal. A bank can flag suspicious activity based on things as simple as a customer using different IDs on different occasions, changing the nature of a transaction after being asked for identification, or making unusually large cash transactions or wire transfers, especially if the funds come from sources the bank considers questionable. But plenty of completely legal, completely ordinary life events can trip these same wires. Selling a car on Craigslist and getting paid in cash, then depositing that large cash sum, can itself look suspicious to a bank's monitoring system, even though nothing illegal happened at all. These freezes can end up blocking rent payments, payroll deposits, and essential everyday expenses while the investigation drags on, sometimes for days, sometimes for weeks. The system isn't built to distinguish person committing financial crime from person who just sold a used car in the first few seconds. It's built to flag the pattern first and sort out the explanation later. And you're the one living without access to your own money while that sorting happens. Even closing your account doesn't make it go away. You might assume that if a bank decides to shut down your account entirely, that's at least the end of it. A clean break, fresh start somewhere else. Not necessarily. Banks often freeze your funds immediately after closure, specifically to comply with federal rules and guard against possible fraud or money laundering. Your access stops instantly, even though your legally acquired money technically still belongs to you. Getting it back typically requires submitting documentation proving exactly where the money came from. Invoices, contracts, pay stubs, because a bank statement alone often isn't considered sufficient proof on its own. And in genuinely severe cases, it goes even further than a frozen balance. If a bank suspects illegal activity, this can be grounds to close the account entirely, and there's often very little recourse beyond opening an account somewhere else, sometimes requiring an entirely new bank, since other institutions may also be wary after seeing the closure on your record. Depending on how serious the suspected activity is, your funds might eventually be returned, frozen indefinitely, or in the most extreme cases, subject to outright asset forfeiture if real criminal activity is suspected. Law enforcement can make banks keep you hooked up. Anyway, here's a twist that almost nobody knows about. Sometimes, even when a bank's compliance team wants to shut an account down, law enforcement can ask them not to. FinCEN guidance explains that law enforcement agencies sometimes have an interest in ensuring certain accounts stay open, despite suspicious or potentially criminal activity connected to them, specifically because keeping the account active and under quiet observation can help an ongoing investigation. A financial institution may legally choose to maintain that account based on a written keep open request from law enforcement, even after identifying suspicious activity, though the bank isn't obligated to comply if it doesn't want to. Think about what that actually means. In some cases, your account isn't frozen at all. It's being deliberately left open and quietly watched, specifically because investigators want to see what happens next. These requests are supposed to come in writing, specify a duration, and are generally not supposed to exceed 6 months at a time, though they can be renewed. You would have no way of knowing this was happening, because telling you would defeat the entire purpose. What rights you actually have. This isn't a completely lawless process, even though it can feel that way from the customer side. If your account was frozen because the bank detected unauthorized access rather than activity you yourself initiated, separate consumer protections kick in. Under Regulation E, once you report an unauthorized electronic transaction, the bank must investigate and resolve the claim within 10 business days, extendable to 45 days if needed. But it must provisionally credit your account for the disputed amount within that initial 10-day window. More broadly, you generally have the right to request information about the nature of the suspicious activity and the reason for the freeze, the right to appeal through the bank's internal procedures or legal channels, and, in some cases, the right to limited access to funds for essential needs even while the freeze is active. Banks are also generally required to provide a clear, written explanation of the freeze and the steps needed to resolve it. And if the freeze drags on unreasonably, you can escalate the issue to the bank's ombudsman, the Consumer Financial Protection Bureau, or your state's banking regulator. These protections exist. The problem is, most people don't know they exist until they're already living through a frozen account, scrambling to pay rent with no idea why their money has disappeared. Why this system exists at all. It's easy to frame this purely as banks overreaching, but the underlying goal is, at least on paper, a serious one. Criminals have long used money laundering schemes specifically to conceal or clean the source of stolen or fraudulently obtained funds. And money laundering poses real risks to the safety and soundness of the broader financial system. Catching that activity genuinely does protect the system millions of ordinary depositors rely on. The tension is that the tool built to catch sophisticated criminals, automated pattern detection, mandatory secrecy, broad discretion to freeze first and ask questions later, doesn't distinguish well between a money launderer and a guy who sold his car for cash. The system was built to err on the side of reporting too much rather than too little, because regulators have explicitly acknowledged the tension between overly aggressive compliance programs and the risk of freezing or closing accounts belonging to innocent consumers, including pushing banks to clarify what they're allowed to communicate, so people can actually rebut incorrect conclusions. That tension hasn't been resolved, it's just being managed one frozen account at a time. The real takeaway. Your bank account isn't just a place where your money sits waiting for you. It's a node inside a federal surveillance system that your bank is legally obligated to operate, whether it wants to explain itself to you or not. The freeze that locks you out without warning isn't a mistake in the system. It's the system working as intended, built around the assumption that secrecy catches more criminals than transparency would. Most of the time, you'll never notice any of this, because most transactions never look unusual enough to trigger it. But the moment one does, a large cash deposit, an unfamiliar transfer, a pattern that breaks from your normal habits, you find out just how little say you actually have over access to money that, legally, is still entirely yours.